October saw a rebound in equity markets. This was following the slight decline that we saw in September, with the US, Europe and UK markets all up over 3%. The month was dominated by continued increases in global energy prices. OPEC and Russia are reluctant to increase the production of oil and gas. And of course, this is positive for the energy sector, but it increases concerns around global inflation. Tax is definitely back in the spotlight, and we're starting to see global collaboration around corporation tax. Countries are working together to increase tax revenue from companies, and that will help drive their economies out of this pandemic phase. In the UK, there were no major announcements in the budget. Of course, this didn't particularly upset the financial markets. But the ONS have upgraded both growth and inflation forecasts in the UK, with inflation now expected to hit over 5%. Now, I've spoken before in these market commentaries about transitory and persistent inflation, and we're starting to see inflation hanging around a little bit longer than we expected, and we continue to watch the data. All major sectors were positive on the month, with consumer discretionary, energy and technology being the strongest performers. And this flowed through into the US, where technology outperformed the wider US markets, and we saw a rally right across that sector. Looking at our factors, momentum, growth and quality were the strongest performing, with value and small cap the worst performing, but they still produced positive returns. Turning to defensive assets, over the period we saw a slight decrease across the whole space, but government bonds outperformed both corporate bonds and the high yield space. So in summary, we're coming towards that crucial Christmas period into December, and we often see the Santa Claus rally hitting global markets. So again, we'll be looking forward to seeing further momentum in the market as we end 2021.